This is the Scalper's Gold update for Thursday, November 20th. This update will also include a little bit of training. This is the Japanese yen versus the US dollar, a 1-minute chart that I'll go over today. So we've got basically three parts to the Scalper's Gold system. You've got your long and short entries. Long entries are in green print. The shorts are here in red, and you've got your scalper line with the momentum bars. These are going to help you as long as the scalper line is red, you can stay short. As long as it's blue, you can stay long if there's a long signal. And then finally the MSA trend, and the trend is going to tell you red means the trend is down, yellow neutral, blue up. And basically the way it works, it's pretty simple. If you get a short signal like we did here at 95.54, where the price hits the signal, you immediately go down, or before it, these will come out in real time before the price gets there. You want to check the trend. If the trend, in this case the trend is blue, meaning up, that tells us we're going to avoid that short signal because the trend is still blue or long. Okay, our next signal, we get a long signal at 95.51, but we look at our trend is red, so we would pass on that. Now the price never came up and hit it anyway. Okay, finally we get a short signal here at 95.25. Okay, that hit right here. Trend was red, so it's okay to take a short signal. So then we can enter our sell stop before the price comes down and hits there, and we're short at 95.25. Then we can look at the scalper line. So where we entered here, scalper line is red, momentum bar is red, meaning the momentum is to the downside. And we're going along, we get one blue dot. Okay, but the following dot there is back to red. So as long as it stays red, we can stay short. Okay, we got another blue dot here, but we didn't get two consecutive blue dots, so we can just turn back to red so we can continue to stay short. Finally, we run into two blue dots. When we get two consecutive blue dots, if we're short, we know we're going to have to set a stop. Here the program did it for you here, 95.15. That's your stop on the short from 95.25. Okay, you can see that stop was not hit. Price rolled over again. You actually got another short signal there, which you can ignore if you're already short from 95.25. You can ignore the second short, and got another leg down there. Let me scroll over here, and you can see after you had your succession of blue dots there, you had your stop put in, that did not get hit, rolled over again, turned back red, continue to stay short. You run into two consecutive blue dots again, so you know a stop is coming. You get a new stop, a lower stop at 94.84. Okay, that came up, that was not hit. Whoops, rolled over again and got to the low down here. So then it bounced a bit here, and then we ran into, you got another set of two blue dots there, which gave you the stop there, oops, at 94.50. So from entry to stop, there's our entry back here. From entry to stop, it's about 75 pips. Now, anytime you get 80 to 100 pips in the Forex, it's okay to go ahead and exit at that point, or take most of your position off if you've got more than one lot. But in this case, even if you just went from entry to stop, that's 75 pips. So not a bad trade. You could probably even end your day on that trade alone if you wanted. Now that stop at 94.50. Sometimes you can, if you're exiting a trade, it may also be a reversal to the long side. So let's check 94.50. Problem is, we look at the trend. The trend is red, so we have to ignore the long signal there. So it's only a stop on the short. It's not a reversal to the long side. So now our trend is neutral, which means we can take long or shorts at this point. You got a short signal at 94.55. Looks like that just did get hit, so you may have gotten short there, and then you stopped here for a small stop. And that's the key to the whole program, is to keep the losers small relative to the winners. If we can get our winners about twice or more or better the size of our losers, and even if we only get if we're only right half the time, we're going to make money. So another long signal there that stopped, small stop there, about 12 or so pips, or 12 to 15, 16.5 pips there. Okay, there was a short signal there. So it's possible you could have reversed to the short side there and would have got stopped again. If you took that short and then got stopped there, you got a long signal here. That was at 94.60. So long at 94.60. And you can see obviously the scalper line stayed blue. You finally got two red dots, which means this dot here tells you need to put a stop in. And that stop needs to be at least a couple of pips or ticks below the low of this particular candle. So in this case, actually with the 4x we used three ticks or 3 pips. So 94.97 was the stop there, or the low there. So 94.94 would be the stop there. So 94.60 to 94.94. So another 30 pips or so there from entry to stop, because you see, you would have put the stop there, came up, and then here would have stopped you out. And then here, it got a little choppy in here. You might have taken a small stop there. There was a short signal here you ignore because the trend is blue. You got a long there that would have stopped. You don't take the short because the trend was still blue. And you get another long signal here. So you see, we got a lot of little, a few little stops. 75 pips, 30 plus pips. Then you run into some small stops, and then you hit another one here. That's at 94.98, long signal. Trend is neutral there. It's okay to take longs or shorts, and eventually did turn blue. And you can see this one. Oops. Let me squeeze this up here. So on the long there from 94.98 up to here, you get just about 100 pips. So you could have exited somewhere between in here with 80 to 100 pips on that move alone. If you waited until you see your scalper line was blue the whole time, kept you in the trade. As long as that stays blue, you can stay long. You get 2 red scalper dots, and that set the stop for you right here.